So I hope you guys don't mind. And it is good to see everybody on. Seth, if you want to start your share, you should be able to. And if you guys have questions, please feel free to drop it in the chat. Or for you guys that's listening here in our private Zoom, definitely make sure you drop any questions or just unmute yourselves. We'd love to hear from you guys. And to the people on the
recording in progress.
Other platforms, just make sure you leave us a comment and we will get to you. Okay. So Seth, we're good to go.
Sounds good. I see it on Facebook. So
awesome.
That's a plus.
There we go. I'm trying. I do not see it on Instagram, so that's okay. We'll get there. All right. But we are officially live. So today's conversation and discussion is structuring your next partnership. And I know a lot of you guys have asked me about how to structure your deals. Partnerships are, I think, crucial to growth. And we'll kind of get into some of the segments and ways that, we like to do partnerships and some of the tactics that we use to help find your next deal. So hopefully this is influential on you guys and you get some value out of this one.
Yeah, absolutely. I would say, just to start out, my first 2.5 years in real estate, all of them were partnerships in some way, shape, or form. I didn't do a deal by myself. I did multiple deals, just never did one solo. I'm all about the 10% of something is a whole lot more than 100% of zero. So.
Yeah, I love that. All right, so let's continue on.
Everybody here knows me, but for anybody that watches later, I guess, right, on all the different channels that we're on, my name is Seth, and I started up this group with Ray. We've been doing it a couple of months now. I'm a real estate investor, and been doing this since about 2019, and all about giving back to the community and sharing as much knowledge as possible.
Awesome. Guys, I'm Ray Glimp, over 100 doors, over $10 million in real estate deals, several awards. My biggest accomplishment is being here every Tuesday, making sure I spend time with you guys to help educate. When we do these, we educate ourselves. We make sure that we stay sharp and also help you guys out here, making sure that you stay sharp as well. So we thoroughly enjoy doing these Zooms with you.
Absolutely. The views and opinions expressed on this podcast are those of the host and guests and do not necessarily reflect the official policy or position of any organization. Content provided is for informational purposes only and should not be taken as professional, legal, medical, or financial advice. Listeners are encouraged to conduct their own research and consult with appropriate professionals before making any decisions based on the information provided in this podcast. Any reliance you place on such information is strictly at your own risk. Kept the lawyers happy. Probably pretty important on this one too. When you start to talk about structuring things, you're probably going to get into some type of contract and things like that. It's always good to have an attorney look those over. I actually met with somebody earlier this week that reached out to Ray and I on Facebook about some different contracts and stuff like that. And I shared what I have, and I even told him directly, like, even though this is what I use on every single deal, I highly recommend you going to an attorney with this to see if they need to do any changes to protect yourselves.
100%. Yeah. So, breaking news. I'm not lagging, by the way, Seth. You can hear me good? Awesome.
I can hear you great.
Good. Breaking news. So, we share this with you guys every week, and we've been it's kind of like the same rhetoric that we kind of share. Home prices. So I've been reading this and following this over the past few months. So if you look back in December, we had an all-time high in October. All-time highs. This was in January. November had all-time high. December had an all-time high. And as we were preparing this, literally, this came across the dashboard or across my TV. That's my TV in the background in my office. And home prices hit a record high. Again, that's up today. Do we think prices are going down? No, I do not think so. I think as interest rates continue to go up, prices will continue to go up, and as interest rates come down, we'll see even more price hikes. So again, if you can afford to buy and position yourself in the opportunity to buy, make sure that you buy.
Yeah, I completely agree. They were showing the graph and stuff like that. I saw some stuff about mortgage rates and things of that nature. And, I saw that it dropped on the national average, dropped like 5 days in a row now. Even one, tenth of a basis point and stuff like that, that's going to save money. That's going to make it more affordable. And as that continues to decline, as the reports from the Fed come out and talk about inflation and stuff like that, it's just going to make stuff more affordable for folks.
Yeah.
Gold diggers. This is one of our best segments that I enjoy because I get to hear from everybody. You guys get to kind of share what your wins are. I'll go first just to throw it out there. So I talk a lot about EOS and goals and stuff like that I use in my business. I just got back from over the weekend. I'm going back to Richmond, Virginia, and meeting with all my team there where we're based out of, and did a 2-day kind of intensive on the business and really dove down what our goals were for the next 12 months and then into the next 90 days. We set some pretty strong goals, and we've got a clear vision going all the way through the next 90 days, and we're ready to rock and roll. We've already put 2 houses under contract since that meeting ended too. So
congrats, Seth. Anybody else want to share their goals? If you guys want to post it in the comments, or if you want to unmute yourself, I'd love to hear from you guys, see what goals you've had this week, either small or big.
I had a successful meeting with the small business coach here in Morgantown, and he helped me file my annual business report and set up future goals that we're going to take care of in our future meetings. And then I also booked 2 new clients today.
Oh, congratulations.
Absolutely.
Congratulations. Anybody else want to share any goals that they've had? I'd love to hear from you guys, if so.
Yeah, I got a few goals, right?
Go ahead. Yeah, we want to hear from you, Matt.
I had a goal to start off this week getting at least 50 new prospective clients on my radar. I got some letters out, so I hit my 10 letter count for the week already.
Awesome.
I picked up 4 new clients from just prospecting, a farm in the new area here in Columbus, and I've had 5 appointments with them so far.
Awesome. Congrats.
It was awesome.
Congrats.
Action, right? Take action. It makes things happen. Casey, I saw you unmuted yourself. Did you have something you want to share?
Yeah, I chime in. I had a goal this year to get to 10 units. I already had 2, and I just put an 8-unit building under contract this week.
Let's go, Casey.
Then 2 days later, signed a contract for a house that I'm going to flip. So
Let's go.
been a busy week.
That's major, Casey. Congratulations. I love to hear that from you, man.
Appreciate it.
I've been following you for a long time, Casey. I know I've been following your story, man. I saw you've been posting, and I'm happy to see you getting deals done, man.
Yeah. It's. I've had a rough couple months with some contracts falling through, and so this was a good win.
Amen to that, man. It's just consistency. What would you say was your secret to getting that deal? I love to hear that.
Just being willing to get out of my comfort zone and go look at something that I probably wouldn't have considered any other time.
Mm-hmm.
I've just been saying yes to everything. If somebody wants to show me something, then I'll go look at it, because you just never know.
Yeah.
You never know what it's going to amount to. You can assume it's not going to be a decent property, but this one was a surprise to me, and more importantly, I got it creatively. So that's something I've been trying to do too.
Congrats, man. I love to hear that.
Power of persistence, right?
Yeah. So just fostering relationships, consistency.
Awesome.
Yep.
That is awesome. I'll share with you guys. I've been working on a triplex project. Actually, one that I bought from Seth. We just got that fully completed, and today we got our final tenant. So we are fully tenanted. So on to my next project. And man, I don't even know what's in the pipeline. I got so much going on, but I know that was the biggest thing for me, that we got this triplex fully tenanted, fully rented. So we'll be getting on to the next project. Actually, I got 2 projects going on, and we got one that we're closing on next week. So hopefully I can share that with you. Oh, and that was the other one. I actually, one of the conferences that I was a guest at, we're actually in talks for me to be a speaker, another speaker. So it's another opportunity as a speaker position for me. So I'm pretty excited for that. So I'm happy to share that with you guys as well. Hopefully, once I get there, if I book it in, I'll be happy to announce it with you and share it with you guys as well.
That won't be a small one. That'll be a big one, sir.
It's a big one. Yeah, it's a really big one. So I'll announce hopefully if I get it. Let's move on. Congratulations to everybody. Anybody else, any small wins that they had? Big wins? Casey bringing out the big guns today. Small wins, big wins?
Dude, I don't know if anyone could beat that. That's a solid deal.
Tim, what's up, Tim? I'd love to hear from you if you got any wins that you had, though.
Yeah, I guess not an 8-plex deal here, but we're trying to scale our wholesale business. So we actually just hired our first acquisition manager. So I can kind of take a step back from the phone calls, man. So we're trying to delegate some work here, and then hopefully I'm not on the phones 2-3 hours a day. So yeah. I guess that's a win.
That's amazing too. Congratulations. Me and Seth just had an 2-hour long conversation yesterday about scaling with, VAs and outsourcing, acquisition managers, etc. So we're doing the same, trying to incorporate the same thing. Awesome. Congrats.
Yeah. I'd love to talk to you about that, Tim. If you got time, I'd love to.
Yeah, dude. Shoot me a text, man. I'll give you all my my Upwork scripts and stuff. Yeah. We were just interviewing people from the Philippines all day, so that's what we were doing today. So just interviewing all day. So
wow.
Cool. On a little side note though, I've actually got somebody that I hired from Upwork in my business. She's worked with us for almost 3 years now.
Dude, there's some genuine people out there, good quality for sure.
Good talent too.
Mary is legitimately like family to us and stuff like that. Been with us for 3 years, so you can find some great people.
Absolutely.
Yeah. Great talent. Awesome, guys. So today we'll be talking about real estate partnerships. Seth and I have graciously bought tons of data together to talk about some of the biggest real estate partnerships. And hopefully this brings some value to you guys as well. And we're kind of going to go over some of the main ones. And pretty much we'll talk about the things that we use. A lot of you guys coming to me about, how should I partner my next deal? If I do take on a partner, some of you in a position where you not have enough capital, or, there might not be any deals in your local area, but somebody else can bring you a deal. And so how do you structure that and bring on a partner? So we thought this was a high level, valuable conversation. And if it does go too high level, you let us know. To the people who are on our Wednesday calls and Wednesday memberships, we will dive deeper into this with you guys one-on-one and kind of strategize some of the things that we do to work on, our partnerships. And we even love to hear from you guys on a Wednesday call about, questions you may have about doing partnerships. Seth, anything you want to add before we dive deeper into that?
Yeah, absolutely. It's just, we'd love to see what successes you guys have had too, right? That's the way that this group really is. It's not just me and Ray out here talking. Like, this is a collective. It's almost like a virtual mastermind, I like to think of it, right? Like, we have some very successful people in the room. So, we got people buying 8-plexes and stuff like that, it's awesome. Yeah. I'm picking on Casey. Yeah. But it really is. Like, you guys are all out there doing something. So you guys all have experience. So definitely what your feedback is and stuff like that's important. Yeah.
So we'll go over these very briefly. And like I said, tomorrow in our mastermind, our winner circle, we'll kind of dig deeper into them if you guys have any questions. But let's just start with GP and LP partnerships. And these you'll hear a lot especially when we're talking about syndications, they kind of all tie in. But a GP partnership or general partnership, they're going to have shared management. So, the partners jointly manage the property. They make decisions together. Equal liability. So all the partners usually share the liability and financial risk as well. There's P&L, profit and loss sharing. So profits and losses are divided equally among the partners as well. These are all typical too. Everything can be strategized in its own way, which I think, let's preference that, is that all of these can be done differently. We're just giving you guys a general scope of how they mostly operate. You'll have flexibility in agreements. So the terms are flexible and they can be tailored to specific needs. And then there's also some simplicity in doing a GP because it's easy to set up with, minimal formalities that are required. Seth, you want to dig into with LPs and how limited partnerships kind of work?
Yeah, LPs are a little bit more complex, but I think it's a good point that Ray said, like all these can be structured a little bit differently. It's just like a real estate deal, right? We can do them creative finance, we can do them cash, we can go to hard money, we can go to DSCR and all these different things. It's the same thing with these partnerships. It's just giving you options, right, on the different things. Limited partnerships have one general partner that's going to assume all full liability and then multiple limited partners beneath it. And that's where you see a lot of the syndications come in. A limited partnership would almost be like just an equity person.
Yeah.
It's a passive investment type option where they contribute capital, but they don't necessarily manage the assets. It's attractive for people that are doing more passive income and stuff like that. It does require a lot more complex structuring on the agreements to do that.
Yeah. Next, JVs or joint ventures. This is actually one of my favorites, like strategies. I combine this with another one. We'll kind of talk about that here. But a joint venture, usually it's very project focused. So let's say you're buying a property, it's specific to that property, or you're doing a wholesale deal, it's specific to that wholesale deal. So it's very specific and project focused typically. Sometimes you'll share resources and expertise. So, partners may contribute different skills and resources. There typically is a defined duration. So it might be, this wholesale, this JV or this joint venture only works to this wholesale. Once we're done with this and we close this, that's it. Or it might only work for, once we refi this property, there's an exit strategy. So that's sometimes how a joint venture will work. It'll have that duration. There are shared risk and rewards. P&Ls are shared based on the agreement. And typically with a joint venture, you want to have different entities. So everyone is independent, but they all combine. And that's how I usually look at a JV.
Yep. Another one we got there on the list on my notes here is the syndications, the REI, the real estate investment funds. I kind of group those together because they're pretty similar. Pooling of funds, basically, everybody coming around and pooling funds together. Typically, they're going to be professionally managed by like a general partner. They're, again, very complex in their structures and stuff like that, but it's great for passive income. Syndications require a lot more regulatory stuff with laws. So, you can't go out and advertise that you're going to provide an 8% ROI on your money or anything like that. So it's a lot very highly regulated on what you can and cannot do. And the real estate investment trusts, the one thing that they do that kind of separates it is that they're actually a publicly traded option.
Yeah. And then equity sharing. Well, I think let's go back to the REIT. There are specific tax advantages too. And that's one of the reasons that people do REITs. I think we should include that as well. We'd be doing a disservice if we didn't. And then also for people who want to get into real estate but don't want to deal with real estate, syndications and REITs are usually one of the easiest ways. Crowdfunding as well, one of the easiest ways to get that passive income. But most of the time it's treated almost like a stock more than anything. Where are we at? We're on equity shares, Seth. I think that's where that's where I was going. So shared ownership, investors and owners share the property. Investor financing, so investors might provide financing in exchange for some equity. Profit sharing, so profits from the sale or the rental are shared. There is some risk mitigation, which reduces the financial burden on one party. And the exit strategy is always clearly defined for ending a partnership. And this, again, equity sharing can be part of your strategy for when you do a partnership. So You guys might both bring money to the table, but it might be similar to a JV where you might exit it in 5 years. So all of these things are kind of interchangeable, and pieces of them are interchangeable. But we're kind of here to speak about it because these are all little pieces that you can add to your tool belt for your next partnership as well.
I think equity sharing is used a lot with private lending, right? When somebody truly private is coming and investing into your thing, and instead of doing like a lien in a second position or something like that, they're actually getting equity share in that asset.
Yeah.
That master lease option there, that's very much similar to like subleasing. Control without actual ownership of the property. So you're actually taking the property under lease and then subletting it out. That way it happens a lot with arbitrage. You see it a lot with advertised out there for Airbnbs and things like that, where people actually don't own the property, but they use the property for short-term rentals.
Yeah.
And sublet it out that way. It's low capital requirement because you're actually not acquiring the property. So you can get some income generated from the rent difference that way. And just kind of, well, it's got a separate bit of risk. It doesn't really mitigate much risk. It just gives you a separate set of risks. And it's for a limited duration as well, because you're going to be leasing that property as well. So it's going to be for the duration of the lease that you have.
Yeah. And one thing about a master lease agreement I want to share too is depending on how it's set up, like, so if you can master lease a whole apartment building, and I'm telling you because I've done it. But when you do the master lease, you have to be very specific about who gets what tax benefits. So that is something you guys might want to consider as well, because the person that I master lease a building from, they want the tax benefits, so they're still getting a depreciation. So that is something to consider as well. Again, we're not accountants, and I'm not giving advice, but I would definitely make sure you iron that out when you do your master lease. A TIC or tenancy in common. So there's individual ownership shares. Partners own specific shares of the property. Separate mortgages are possible. Each owner can have their own mortgage. Flexible ownership percentage. So ownership shares can vary in size. There's independent decision making. Each owner controls their own shares. And there's estate plan of flexibility, and shares can be bequeathed separately. So I look at these as almost like somewhat like a timeshare. Seth, you agree with that? Would this be like similar to a timeshare?
I agree.
Yeah. So it's not very common for real estate investing per se, but still something you might want to consider, especially let's say you partner with someone and, maybe it's an Airbnb in a very good location, and maybe it might be a duplex or a triplex, and maybe you own a piece of it and you want to come during certain days. That might get into that tenancy in common kind of factor.
It also works if you ever need any type of office space or something like that, that's kind of brick and mortar, and you're able to share it with, another business and stuff like that. It's definitely a possibility.
Yeah.
Share the expense and have a better place to do so.
Awesome. Yeah. And to the people who are watching, please make sure if you have any questions, we're happy to answer. I know we're going over a lot. And to the people in our group chat, make sure you guys ask any questions as well. And we're going to give some examples of how some of these can work as well for you guys. LLC. Seth, you want to go deeper into LLC, and then I'll deep dive later on that?
Yeah, for sure. This is kind of on the aspect of partnering with an LLC. Obviously, LLC is an entity that you can use for your business, but a multi-member LLC or a member-managed LLC is a great way for partnerships. You can do a lot of different things with it. It gives you limited personal liability for your debts as well. It kind of separates you from the actual business debts when done properly, and it gives you a lot of flexibility on how profits are distributed. It gives you a lot of flexibility as well on how the operations. It's all there in your operating docs when you create your LLC, and then how you update those as the years go on through your member meetings and things of that nature. It's got a pass-through taxation, so all the profits are taxed once they're at the member level, not at the business level, which can be a benefit for businesses as well. And something that a lot of people are kind of talking about a lot right now. It's not necessarily on the partnership side with LLCs. It's very easy to transfer ownership. You can actually sell the LLC versus selling the asset that the LLC owns, which is kind of a loophole with these new wholesaling laws in a couple of states out there.
Yeah, and which is big right now. I just saw that they passed some new wholesale laws in Virginia too. So those loopholes will be very important. Finally, crowdfunding, and we kind of put this with syndications, REITs. Crowdfunding has typically a smaller investment amount, which allows more people to participate. And so a lot of crowdfunding you'll see, you might hear it actually on Bigger Pockets. I think it's called Rent to Retirement or something like that, or Rent Ready. One of those programs you'll see on Bigger Pockets, and I think you get started for like $100 or $500. It'll get you the introduction into real estate investing. Everything's usually done online. You never really meet anybody. There's a variety of projects, so you could buy a 10-unit building in Florida, never see it, but still get some of the benefits of investing in it. Usually a passive investment, so you never see the property. You just have a piece of it. You have like a share of it. There is a higher risk and reward. It can offer higher returns, but you don't have any connection with that person, with the person that owns the crowdfunding software. And so there is some risks that are inherent with that as well. So, but crowdfunding, again, it allows you to get in with very little money. And for people who are just starting and don't want to deal with real estate, syndications, REITs, and crowdfunding, I think, are all great sources for people to get started.
Tim asked a question here in the chat before we move on to our comparison there. Since I'm working on a deal right now, have you ever made a seller an equity owner of a multi to get into the deal done?
Tim, you want to tell us a little bit about that? That way we can dive deeper.
Yeah, so it's and it can give you guys a little bit of idea so that your listeners for a potential creative structure. So it's a 22 unit in Louisville, Kentucky. So it's my backyard. We're doing a creative finance deal. It's fully paid off. So we're trying to do a seller finance deal. Mm-hmm. It's a poorly operated deal where the utilities are still on the owners. It has a poor property management that's charging them a lot of money. So what we're trying to offer him is he wants $200,000 down, which is about 20%, 20 to 30% down. And obviously we're in the business of buying as little money as possible down. So we're offering him right now is, hey, what if we don't give you any money down? We'll renovate the property and we'll manage the property and lower the expenses. And we'll give you 15 to 20% equity in the deal.
Yeah.
And so that's what we're trying to work on. We've never done it before, but that's just something that we kind of threw out there, right? Because we're making a bet that dude's 15% equity is going to actually make him more money over time if we're operating it, because we're confident in our ability, right, in cutting the expenses down.
Yeah. So somebody asked, were you on Pace's YouTube channel? Yes, you were. Congrats, Tim. I saw that too. That's an amazing community as well.
I'm becoming a creative finance guru just like
go.
Everybody else.
Love to hear it.
You're the Pace of Kentucky, right?
Yeah, I'm trying to be.
Right.
So, and I want you guys to understand something that Tim mentioned and the way the game is played, right? And if you ever play Monopoly, we play Monopoly in real life, but Monopoly has very basic rules, okay? You stop at the property, you can buy the property, and then you can move on and buy the next one. You got to pay cash for it. But there's unwritten rules. And partnerships in Monopoly is actually a fast way to end the game, right? So what you're saying is this person, you're offering them 15% equity. Yes, you can do that. I think there's no problem with that. If somebody younger came around and like, hey, we'd love to keep you in this deal. The only thing is, how would the depreciation work for him, right? Since he never really sold the property. So that would be something for him to, I guess, consider, because he would probably want depreciation benefit of some sort.
So that's a good question, but so like we're hoping that he would just sell the property into an LLC. So like this is what we're thinking,
Mhm.
and tell me if I'm crazy.
Yeah.
We're thinking about creating an LLC,
Mhm.
giving him 15% equity of the LLC, the ownership,
Mhm.
and then when he sells the property, it's going to sell it to that LLC. So it's going to be 123 Main Street LLC. He'll sell it to the LLC, and he's the equity partner of it. So I guess in theory of it, right, he would still get the tax depreciation of 15% ownership of the property.
Mhm.
Is that kind of right?
Yeah, he'd get hit on the capital gain side.
Yeah, he'll get hit on the capital gains, but
Sure.
it's a seller finance deal.
Yeah.
So he's kind of double dipping. So like we're
Yeah.
kind of trying to make this sexy for him.
Yeah, I
And
think
so,
I would
you
take
know-
I would do something like that. Because then
Okay.
I'm selling my property and I still the only thing, and I'm thinking devil's advocate, is what's his recourse if he fail?
He gets a brand new renovated property for free.
Yeah,
He gets to buy us out, or we just give him back the property.
yeah, yeah.
Actually, shoot, that's actually complicated too because we probably have to dissolve the LLC.
Correct. Yeah. So you want to make sure that is like clearly written. I like the 15%, but again, I wouldn't do that long term either. For your protection,
Yeah, maybe a buyout clause.
yes, I think so.
Okay.
When you hit like a, if it's 20%, what's the purchase price on this thing?
It's 700K.
700. So 20% would be 140. Is he seller financing the whole thing?
Yeah, so he'll finance the whole deal.
You're looking to not have to pay that 140 down now.
Correct.
And so you, in exchange for the 140, you're going to give him 15%.
Yeah.
I don't think that's such a bad deal.
Yeah, like because the thing is like for us, like it's zero money out of our pocket.
Yeah, for sure.
That's why it's like kind of fire. So like, but like we don't mind giving him like $2,000 a month cash flow.
Yeah.
If we're walking into deal with $0 out of our pocket, and plus we're kind of incentivizing him because we're saying that we're going to renovate the property for him.
Yeah, I mean, really, he's just acting as a bank. He has a position as a bank, and he has a
exactly.
position as an investor too. So for him, he's kind of incentivized to make sure you cash flow and make sure that you make it. But he's eating two ways. So yeah, I wouldn't see a problem with that. I would try to have a buyout clause though, or once the property is fully paid off, then you exit or have that exit strategy so you can retain or recoup that 15%. Also, depending on the rate, it might just be worth it to just tag along with us, man.
Yeah, that's good
I'd
points.
have the attorney definitely get digging into the operating agreement when that LLC was created for things like that. It should all be laid out there in your operating agreement to start out.
Now,
Yeah, that makes sense. That's actually good points to put out there.
I want y'all to see exactly, the people listening to, how this all works is that you now have an opportunity to JV, right? Because this is a JV. You're going to start a new LLC. You're giving equity shares. This all plays a part. This will be a GP and LP too, because you guys will be the general partners in this as well. He would be a limited partner. I mean, I wouldn't give him much say, if anything, as far as what we do.
Yeah, right.
Yeah, he has no say. Right?
Yeah.
If he sells the house to us, he has no say. He just gets paid.
Yeah.
Like that's the agreement.
And so this is how we combine these terms. So today we give you guys a baseline, and Tim is showing us how you actually use those pieces. I mean, you're pretty much putting 4 pieces out of the 7 or 10 to use right now just in that deal. And that's the big thing, is you have that foundation of understanding, okay, I can use this and strategize to make the deal flow through. So yeah, I appreciate you sharing that deal, Tim. I think you're in a good position. I would me personally, I would like to buy them out of that 15. I mean, what's that 15% going to be worth? And
It's going to be worth a lot more later on.
Yeah,
That's the problem of the buyout clause, because if we maximize the cash flow on the property, we're adding $1 million of equity.
Yeah.
So it's going to be a pain in the butt trying to pay him out. So we're kind of scared about that too.
And that's what Chad just put in with that 20%, 15% be for the life of you have in the property. And here's the other thing, maybe you and your guy, whoever else you're partnering with, you guys JV and have the initiative of like, look, we're going to sell this in 5 years too. Maybe it's not a forever property. You sell it in 5 years, exit it, you recoup your money 1031 and then put into another property that you own 100% of.
Absolutely.
And so you got into this deal with no money. This guy's paid off. Everybody's made whole. You guys sell into the sunset.
Yeah, I figure if it ends up, once it's performing right and stuff like that, it gets to a 2 million evaluation, right? This 15% turns into what, 300,000,
Mm-hmm.
right?
Exactly.
Versus the 140 that he was looking at, or 200 that he was looking at. So, it's just a matter of, when you go to cash out and stuff like that, that's going to be a big chunk.
Yeah. And so another key becomes that do you raise money, which goes to crowdfunding, or somewhat, I would say crowdfunding or GPLP. Do you raise money from other people to get that 142? Then again, how much is that 140 worth? Not many people are gonna give you 140 for 15%.
Dude, that's the problem too. Is like originally he wanted that money down, and it's like, hey man, we don't want to do that because we have to raise that money, and like raising that money is going to cause the deal to flip upside down. Like it's going to cause us to lose money because we got to pay the private money lenders too.
Yeah.
And that's where we kind of like, hey, would you be open to hanging on to the property with us for the ride? And it took about like 4 months of like meeting him like over and over again. Like, and I'll tell you guys, like I've been to lunch with him and his wife like probably like 2 or 3 times. And so he can get to know me a little better. But the biggest thing is like, he needs to trust me to be able to operate the property too.
Yeah.
Or else he's going to lose money on the back end. So I don't know. It's a kind of icy road. I just want to hear you guys' opinion on it. It's kind of a dicey deal. So
yeah, I would just make sure I could, if I can, just buy him out. And if it's going to be a long-term hold, I definitely don't want to carry him through this whole time. Especially if he's getting appreciation or, I would even try to buy out that 140. Makes
sense.
Yeah. While we're on this topic, Casey, I got a call on you, Casey, because you sounds like you've done a killer deal. If you're still here, tell us. You want to tell us about your deal because you got some seller finance, some terms going on. You want to tell us about it? Maybe we can, tie it in and relate it to what we're talking about now.
Yeah, so it was brought to me from a realtor. He has an exclusive listing with it. It's not currently on. He had actually called me about it to ask just what I thought the property would be valued at before he got the listing. And at that point, he's a pretty good friend of mine. I put a bug in his ear at that point that said, if these guys are serious about selling it, they're going to have a hard time at the price that they want. You should talk to them about considering seller finance.
Mm-hmm.
So he did, and he was open to some education from me about it. So fast forward, they had talked to somebody else, and it kind of fell apart. So I went and looked at it. I got him into so they wanted, it's 2 separate buildings that sit right next to each other. They wanted $185 for each building, severely under rented. They wanted a $2,000 a month payment with 4% interest calculated. So that did not work. I got them down to $1,600, 0% interest for 5 years with the option to extend 2 additional years. My out-of-pocket, I had to pay the realtor's commission, which I was fine doing. I'll recoup that in, I believe, 18 months. So
that's awesome. That's a hell of a deal.
I was able to offer them, the way I got 0 interest, I was able to offer them $10,000 more for each building. And it's definitely benefiting me because I'm going to be paying down that principal the entire time. And
that's free money. That's free.
My finance is going to be.
How much would you have been paid in interest charges, even at 4% for the 5 years that you were going to be
about 40 grand? About 40 grand. Yeah,
exactly.
It's crazy.
Yeah, so just that carrot of I can give you a little bit more for each of these properties, in exchange for I need this payment and 0% interest. They went for it. So,
and again. That's the best part about real estate, guys, is the creativity behind it. Like, we hear so many boring ways of like, okay, well, I got to buy this property. And we have 2 guys who are literally doing deals right now through creative finance, through, and you guys didn't get these deals on market, I'm guessing. These are both off-market deals, so making deals happen I know, Casey, you don't have necessarily a partnership, but you're still being creative through your term. So that's amazing. That's a great deal, man.
And I guess going with just the relationship part of it, the realtor was the seller's realtor was very open to hearing education. Well, why are you wanting to structure it like that? Like, how is that going to benefit them? And why do you need it at 0% interest? And what's the refinance? So he was very receptive to the education part of it, which ultimately helped me greatly because he was able to help leverage that for myself. So,
awesome.
Yeah.
Keep that agent forever for sure.
100%. The unicorn, right?
Yeah.
Love to find them. Seth, let's go forward with kind of what we were talking about and kind of what we jumped into as well.
Yeah, what we wanted to do is we wanted to take the LLC versus the joint venture, which is probably the two most common ways that we do partnerships in real estate, and kind of compare them side by side. So we started off with the definitions. So just a LLC is a business structure that offers limited liability protection as pass-through taxation. As with corporations, the LLC legally exists as a separate entity and from its owners. Therefore, the owners cannot typically be held personally responsible for the LLC's debts and liabilities.
Yeah.
And then a JV is just a business arrangement in which two or more parties agree to pool their resources for the purpose of accomplishing a specific task. And that's kind of a key phrase here. This task can be a new project or any other business activity.
Yeah. So partnerships, like we mentioned, these aren't just one, I can only do one strategy, or I can only do, pick one and choose one, live and die by one. These are just other ways to look at real estate deals like these guys talk about. I'm happy you guys were both on today and share these experiences, because y'all made this so much easier for us, because I was going to give y'all my story, but this is even better to have people live telling their stories, So the difference is one is long-term, one is short-term. Very defined term is the biggest thing. It doesn't have to be short-term. A JV could be, 10 years, but it is a defined time. You get the personal asset protection. For the LLC, you can have ability to secure lending. Specifically, if you buy a property, you want to lend in that LLC, it's huge, in a JV, you'll have that clear responsibility defined. And typically with the JV, it's independent entities. So, it would be maybe, Venture Properties and Glim Consulting. We're JVing to do a deal. We're working together on a joint venture. But again, these things can be combined. And we saw it. We saw just now, when I mentioned to Tim, maybe have a defined term with this person. That's part of your new LLC. Have a defined term with them. Have that buyout clause if you can. Your asset protection. I'm huge on asset protection, making sure you have that LLC set up correctly. Getting the lending, huge. But with a JV, the other thing is somebody's bringing something to the table. That's the biggest part I think about the JV is two parties are bringing something to the table. So one party might be bringing the deal, the other party might be bringing the lending. Somebody might be bringing the actual money to the table. Somebody might be the contractor. I got a deal right now where one person bought the money. I have the property management software, and the other person is the contractor. Boom, let's all just hop into this thing and be married, right? And so I don't have to worry about the construction of it, and I don't have to worry about the actual sourcing and paying for the deal. I don't worry about any of that. At the end of the day, my job is, employ that same property software system that I have into this deal. And so we're all bringing something. So we're all JVing, but it's formed in an LLC. We have clear definitions of what everybody's responsibility is. And I think that's the biggest part of this.
That's a long-term hold, right?
Oh yeah, that's a buy and hold. That thing cash flows.
That's why the LLC makes so much sense, because it doesn't have that defined term.
Yeah.
Whereas my first deal ever was fix and flip. That was a very defined term. When we sell this property, we go our separate ways. We ended up not going separate ways. We still do business together every day. But that partner and he brought the funds and I handled all the renovations. I brought the deal, I handled all the renovations, handled the day-to-day. He brought the funds and we pulled it together on a joint venture that way. So it worked out really well.
Yeah. And so that's the biggest key, is that all these terms that we mentioned, they can all be used strategically to position yourself. Because at the end of the day, guys, you want to make sure that you have the best benefit for yourself. Tim, I love your deal, but I want to make sure that you get the best terms for you. Casey, I love your deal, but if that guy will offer you 4% and I knew there was a way for you to get 0%, I want to make sure you get the best terms for you. So knowing these tools are going to help you get the best terms for you in your deal. Before we move forward, go ahead.
It's specific on both of those too, right? Like both you guys been following up with these people for a while.
Yeah.
Right. Like Tim said, he actually went to lunch with the people. Casey, you said you went back and forth with the agent multiple times about different stuff and educating and stuff like that. The off-market deals and stuff like that, there's a statistic out there that it takes like 12 times before it actually closes. 12 touch points and different things like that. And that honestly, when you start getting into the creative deals, it's probably low. It takes a while to build the rapport and build the trust to make these things happen. But having that, it's also good because it gives you time to develop your strategy for what types of partnerships you're going to use or what types of terms you're going to use and really break down and find a win-win for everybody.
Yeah. So before we wrap up, guys, any questions? I'd love to hear from you guys if you guys have any questions. And guys, thank you again for Tim, Casey. I know we put you guys on the spot, so thank you again for sharing. I know this is totally random. But any questions for you guys? And again, to the Wednesday community, we're going to do this one-on-one with you guys or in our group calls or winner circle. We'll dive deeper into this subject a little bit more with you guys. But any questions for you guys specifically, especially on the Zoom, Facebook, Instagram, any questions you guys want to ask? And we could talk about partnerships or any real estate questions that you guys may have. We got a couple minutes. I'd love to hear from you. Somebody asked, I'm working on a deal. Just want to go through this real quick. Oh, that's for you, Tim. Somebody, yeah, make sure, and if you guys can, make sure you put your IG, your Instagram, your Facebook, put it all in the chat. We love to hear from you guys there as well. Make sure that we all are talking. Someone asked, where should I start? Geez, I could answer that all day. Seth, if you had to get, let me ask you out real quick. We got a couple seconds in a 30-second spiel. Seth, Tim, Casey, because you guys are doing deals right now. If you had to tell somebody where to get started now, 30 seconds, what do you tell them?
Figure out your strategy, figure out your market, and then you can network with intention, right?
Good.
So if you want to go flip a house in Louisville, Kentucky, you go reach out to real estate agents that know how to flip a house, right? Mm-hmm. Simple. Like that's how I started. I just reached out to people that knew what they were doing, and then I JV'd with them. So speaking of this, I JV'd with people, and that's how I got my deals.
Yeah.
I say step one is finding a mentor.
Yeah.
Basically, anybody that's doing what you want to do, like you need to have an idea of the direction, like what Tim said, right? And then find somebody that's doing it really, really well, and then add value to their business.
Yeah.
However that is.
I agree. Casey, anything you want to add to that?
My rules for myself is, because I usually don't push myself out of my comfort zone, was just say yes. So if I was presented with an opportunity to have a conversation with somebody, just say yes.
I love that.
I got invited to go see a property. I went and walked a property with a friend several times. I'll take off work. Just say yes. Let's make this work. So
yeah, I love that. Again, I think the biggest thing is finding mentors and surrounding yourself with like-minded people. So to whoever asked that question, you're here now. You're in this room now. You're already doing the right step. You're around the right people. So surround yourself. Be in a deep dives. Get in as many rooms like this as possible. Join us every Tuesday. Join us if you can. Sign up. Join us on Wednesday on our Wednesday call. I think that's the best place for you to start it, especially if you're getting started, to help you figure out what your strategy is and what you would love to do to move forward. Next question. Do you need an attorney to write the contract for you and a partner, or it can be written either or either or, and sign without notary. Sure, you could write your own contract, but I would highly advise that you get an attorney to do this, because an attorney, one, has seen all these situations, two, is going to work for your best benefit. And that's kind of what we're talking about, is making sure that whoever does what you want, they are working for your best benefit. Today's call, my benefit is talking with Tim and helping Tim out, and talking with Casey and helping Casey, making sure that they have the best scenario for themselves. So your attorney should, again, have a good idea of what they would want for you and how to protect you, versus just a contract that's written from, ChatGPT or online.
Yeah, don't use a contract from ChatGPT. Don't do it.
Yeah.
Don't do it.
Yeah, I highly advise against it. Link up with local title companies, Tim said. Yeah, I agree with that too as well. Let's see. For creative. Let's keep going. What if you're planning on buying just raw land? Land is a different beast. Let me tell everybody that here. Land is totally different. I do not buy land unless I plan to develop it. We might need to get somebody who just specializes in land, because I'd like to learn more about that too.
A lot of due diligence. I've done land deals before. I know a couple of people that do only land.
Yeah.
And it's that's probably the biggest thing that I've learned in my time. It's a lot of due diligence. Yeah.
That is not my forte. I will only buy land if I can develop it, and that's it. For the locals, Seth, you want to talk about anybody in the Morgantown area? Real estate investors?
Anybody that's in the Morgantown area, or anybody that is not in the Morgantown area, wants to come to the Morgantown area on the fourth Thursday of any month. This month we're meeting at it's called Mountaineer Tap House here in Morgantown on the 28th on Thursday at 6:30. It's just a happy hour. A bunch of like-minded individuals get out and talk about real estate. It's a real good time, and it's coming up again. So anybody that's local, please come on out and have a couple drinks and have some talk.
Awesome. Guys, it has been a pleasure. Thank you for joining us this evening. Next week, Seth, what's the conversation for next week before I end it?
Question. I didn't check. Oh, problem tenants.
Oh, this is my favorite, guys. This is going to be a good one. I got pictures and everything. I'm going to share everything with y'all. We're going to be talking about dealing with problem tenants. I know a lot of you guys have your first property or looking to get your first property. We are going to be talking about dealing with problem tenants, headache tenants, silly things tenants do. And hopefully I could save you guys from, some of the situations and stories. I could save you some headaches. So hopefully you guys tune in with us. For everybody on Facebook, YouTube, Instagram, we appreciate you guys tuning in. Seth, you want to send everybody off with a quote?
Yeah, absolutely. I didn't fill it in there, but it's that with partnerships, it's my famous quote that I always have, right? I'd rather have 10% of something than 100% of zero.
Yeah. So you could get in the room, guys. You could be successful. You just got to be in the room. Rooms like this will help you be successful.
Yep. Maria mentioned take action when they were asking where to start and stuff like that. And that's one of the things that I always list on a lot of my posts when I go out on networking events and stuff like that. Step one is showing up. So.
Casey said it. Just say yes. Go. Be in those rooms, guys. Thank you, everybody. It is a pleasure, and I will see everyone next week.
Yeah. We'll see you guys tomorrow at noon for our Wednesday.
Yes.
All right, Ray.
All right. I'll see you, buddy.